Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro against the dollar. A new recent high yesterday, but looking just at that is disingenuous to the whole picture. Yes, it was the highest close since April 2022, but it was also an outside day, the lesser cousin of the key reversal down in this case. And at one point it looked very much like it would be a daily key reversal down. This to me is a further response to how in the last few weeks we have seen the market capped by the rising middle time, currently 109.97, which is highlighted in bright red on my daily chart, of the late November 2022 to early January this year bullish Andrews pitchfork. And more recently by the upper time, currently 109.54 of the bullish shift pitchfork for the same move, and finally to the crossover we had this past Monday between these two, and to the next one due on Thursday next week. You can see the crossovers highlighted in light red circles on my daily chart. These time crossovers are usually accompanied by one or more of the following: a change in trend, a reinforcement of an existing trend, and volatility. I had a concern that this past Monday's time crossover may be a peak for this market, especially as the interesting but untested 50% Fibonacci line of the January 21 to September 22 move is nearby at 109.44. Well, it has looked like it was a peak, and yesterday my thoughts were that it did not look like a durable one. However, I am reappraising that view, and we'll see what today brings after yesterday's interesting action. Looking below, support is again, unsurprisingly, at the May 2020 low at 107.66 and the April 2020 low at 107.25. But I would now place perhaps some more emphasis on the rising middle time, currently at 107.69 of the bullish shift pitchfork. So far today, a small move low, but it's still within yesterday's range, and we've moved back up and it looks like an indecisive doji cross right now. Cable, aka sterling against the US dollar. A higher but indecisive spinning top yesterday that started as a follow-on higher to the previous session's reactionary bullish closing white Mariposa, but ended up neither fulfilling the potential on the upside nor countering it on the downside. During the session, prices tested down once again, below the extension of the breached lower trend line, currently at 123.82, of the September 2022 to January this year ascending wedge pattern, but obviously closed back above it. Now, I've highlighted the ascending wedge pattern in dark blue on my daily chart. The market had previously pierced the lower trend line as well as the 50% Fibonacci line of the June 21 to September 22 move, but it was only the trend line yesterday which indicates the bullish pressure underneath. Overhead, we have resistance at this week's high at 124.47, which mirrors December 22's high at 124.45. I was recently inspired to draw a bullish shift pitchfork for the same period as the bullish Andrews pitchfork, primarily to see where the crossovers were. They are in mid to late February, but what I found interesting was how the middle time, currently at 125.03, had capped the market last week and earlier this week. I've not highlighted this shift pitchfork as it would altogether make me dizzy looking at it, but the middle time is there as resistance, and so far has done a good job. Anyway, apart from these pitchforks, the late September to late November 2022 ascending wedge pattern is still one of the most relevant patterns here. Prices had previously managed to reach the primary target for this pattern in the 124.20 area, though we still have opened the secondary hard to reach target X3 in the 128 even area. Now, so far today, a reactionary move lower, testing the lower trendline extension once more, but that is all. That is all. Euro sterling. A second bearish black crow yesterday and a follow-on lower to the previous session's combined bearish dark cloud cover pattern and bearish closing black Mariposa. This seems to be a final action to the recent move higher, started from last Friday's bullish engulfing pattern. These recent moves higher had been a somewhat counter-reactionary move upwards after earlier attempts lower had failed, especially in trying to penetrate the combined supports of the April 21 high at 87.19. And perhaps more importantly, the swirling, entwined mass of the medium moving average, currently 87.34, and the short medium moving average, currently 87.32. These two moving averages had made what I called a mutated golden cross towards the start of January, with the moving averages entering the wrong way round, followed by a genuine golden cross 2 weeks ago. They now seem welded together. Meanwhile, overhead we have the 50% Fibonacci line of the March 20 to March 22 move at 88.51. You may remember this resistance was the cap on the roof pattern seen back in November last year. With this peak 2 days ago, it'll be interesting what happens next. Now, so far today, a reactionary move back up, as if the breather the market took these past 2 days was over and perhaps another move might start. It's still early, looking like possible bullish double, but it's still too early. US dollar against the Indian rupee. A second bearish black crow yesterday and a follow-on lower to the previous session's bearish double, but it was also an indecisive spinning top. Overhead we have the slowly rising medium moving average, currently 81.83, and the more immediate middle time, currently 81.58 of the October-December 22 mildly bearish shift pitch hawk. Whilst below, well, we have the recent 50% Fibonacci line at 81.13 plus the early August to date uptrend, currently 81.02. I've highlighted the uptrend support in bright red to not only show it more clearly, but also to acknowledge its role as the lower trend line in the August-September 2022 ascending triangle pattern that was so influential during autumn and winter last year. Now, something I'd previously mentioned but wish to reiterate here. I previously drawn an October 2022 to January 2023 bearish Andrews pitch hawk, which I've conveniently highlighted in dark blue. The market is at the moment in between the upper time overhead, currently 82.21, and the middle time below, currently 80.11. Well, I was recently inspired to draw a bearish shift pitch hawk for the same move, and I noticed two features. Firstly, the previously mentioned middle time of the bearish shift pitch hawk, which I've conveniently highlighted in green, is mixing in amongst the market action right now, and it's seemingly acting as a capping action, especially on a closing basis resistance. Secondly, the lower time, currently at 80.23, had a crossover with the middle time of the bearish Andrews pitch hawk, currently at 80.11 earlier this week. As anyone who knows my commentaries will testify, I always say that when you have such crossovers, look out for one or more of the following to happen: a change in trend, a reinforcement of an existing trend, and or volatility. Well, this week has started one or more of these three. However, before you can get too carried away, please remember this week's high was capped once again by the slowly rising medium moving average, currently 81.13, with the short medium moving average, currently 82 even, also not too far away. Next, as I've said here in recent days, the big pattern in this market, and I suspect the reason why the supports below had become very influential, is not the bearish Andrews pitch, although it is a big enough pattern on its own. Rather, it is the action since September 2022 to date, forming a large double top, Adam and Eve type pattern. We are currently on the final leg moving lower, and this pattern will very much depend on whether the market will drop down to the neckline of the pattern, which I am currently indicating as being in about the 80-20 zone. Once there, and importantly, if we get there, then it will depend on what the market will do. The next questions are more succinct. Firstly, is the action over the last 2 weeks or so an inverted roof pattern in the making? Now I've highlighted what may be one of the slopes in purple on my daily chart. Secondly, and finally, we are set up for a monthly key reversal. If we close next Tuesday, the 31st, either over 82.73 or under 81.36, then we'd be on. Right now we're looking at a lesser outside month pattern. Now, so far today, a higher open, a spike up over the middle time of the bearish shift pitch hawk, but prices have since come back down, and we are looking at another possible indecisive spinning top pattern right now. US dollar against the Brazilian real. A third bearish black crow yesterday, and a limited follow-on lower to the recent combined key reversal down and bearish engulfing pattern. But in reality, I'd rather look at it as an indecisive spinning top with a long tongue on top. The market this time had punched up through the former support, now resistance, at the 38.2% Fibonacci line of the June 19 to May 20 move at 510.87, as well as punching down once again through the support of the 38.2% Fibonacci line of the March 2021 to May 22 move at 507.39, and even got as far as the 61.8% Fibonacci line of the June 19 to May 2020 move at 505.73. But for a second consecutive day, it halted its decline there. This was again interesting, not because of this Fibonacci line, but because just underneath it is the middle time, currently at 504.5, of the well-bashed and broken July to September 2022 shallowly bearish shift pitchfork. This pitchfork is highlighted in dark blue on my daily chart, and it had seemingly repaired itself despite some earlier onslaughts. Further down, beyond the middle time, well, on my daily chart we have a relatively free zone down to the 50% Fibonacci line of the October 2019 to May 20 move at 496.61. We've seen support emerge at 503.33 and 501.80 and 500.73, but so caution a little bit in that, just in case. Meanwhile, overhead, we still have the 50% Fibonacci line, the March 21 to May 22 move at 522.76, plus the flatlining medium moving average, currently 524.83, and the jinxing short medium moving average, currently 525.28. And that is before we can even reach the combination of the 50% Fibonacci line of the May 20 to April 2022 move at 527.37, and the declining upper time, currently at 527.52. Over all of this, perhaps the most interesting recent action had already partially happened on the 12th of this month. And that was the setup by then for a monthly key reversal for January. So if we close on the 31st of January, that is next Tuesday, either under 518.51 or over 528.60, then we'd be on. Anything in between, it would have the lesser outside month pattern right now. Well, right now we are also well within monthly key reversal down territory. The US dollar against the Mexican peso. A second consecutive indecisive pattern yesterday, this time an indecisive doji cross. This once again does not help in any way, nor does it hinder the earlier inverted hammer pattern. It was another day this week of the market staying close to the well-broken upper time, currently at 1874.84 of the big old March to July 2022 bearish Andrews pitchfork. I would so like to retire this pitchfork but as long as the market keeps doing things like this, providing dynamic support or resistance, I'll keep it on, despite it cluttering up my daily chart. Overhead, the cap on the day's action was not really the congestion at the 1885.40 area this time, though it did cap it again on a closing basis. Rather, we have a little further overhead, the interesting and declining middle time, currently 1897.95 of the late September to mid-December 2022 bearish shift pitchfork, which I've conveniently highlighted in bright red on my daily chart. Looking further below, we have the old neckline of the January to May 2021 head and shoulders top, currently 1868.09, as well as the lower time, currently 1862.57 of the large March to July 2022 bearish shift pitchfork, which is highlighted in dark blue on my daily chart. These two are now separating out, and their combined force, which was quite substantial, is accordingly and already dissipating. So far today, well, a small try higher followed by a try lower towards the middle time and setting up for a possible bearish engulfing pattern, which would not be the hardest thing to do since considering yesterday's indecisive doji cross action.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.